If you're a first-time buyer or even just thinking about buying your first home, I'm going to tell you the single most important factor that's going to affect what mortgage rate you can get, and it's called LTV, or loan to value. It's basically what portion of your home's current value you're looking to borrow. So let's say you've got a £10,000 deposit and you're buying a £100,000 house. Therefore, you're borrowing 90 grand on £100,000, so you have 90% loan to value or 90% LTV. The lower the LTV, the smaller loan compared to your house price, and the better the mortgage rate you're going to get. Now, what happens in reality is that mortgage rates will drop every roughly 5% of LTV, and that's usually going to work right down to about 60% LTV. Once you go under that, they don't tend to get much cheaper. But what does this actually mean when it comes to money in your pocket? Let's give you an example. So, say you're buying a house for £180,000 and you've saved up a nice healthy 17 grand for a deposit. Sounds great, nice big amount. But 17 grand is just over 9%. And because it isn't 10%, that means you don't have 90% LTV. So you'll only be able to access 95% LTV products. Yes, you're way past 95%, you're at like 90.56, but if you're not at that 90% or low, you're going to be stuck with 95% rates. But if you could push to find an extra £1,000 deposit and get yourself to £18,000, now you're at 90% LTV and now you're getting 90% products. Now, these are made up numbers and it's going to change over time, but as an example, at 95%, let's say the mortgage rate is 5% interest. At 90% though, the mortgage rate is going to be closer to 4.5% interest, which on a 180 grand home over 25 years would be £50 to £60 per month difference in the amount you're paying back on your mortgage payment just by putting down that extra £1,000.